Hi, and welcome back to another options for newbies tutorial. So today's topic, we're going to cover our naked calls and naked puts. Okay, so they're also known as uncovered calls and puts. So with these instruments, essentially there's no underlying asset to cover your position, hence the word naked. So if your position goes against you, like I say, there's nothing to mitigate your losses on there. Okay, so you have the obligation and not the right to buy and to buy or sell a security at the strike price at a certain time. Okay, so you're selling. So of course, if you're selling calls, you're bearish, right? And you're selling puts, you're bullish. Obviously, it works the opposite of a long call and a long put on here. Okay, so risks and rewards for naked options. So of course, you collect a premium for selling the options. Okay, you're getting that from the buyer on there, but like I say, you're taking on a bit of risk when you do that. But for that risk, you can see you're getting that premium. So less buying power is required, and I'll show you an example for like a for a naked put as opposed to a cash covered put. Okay. Um, Now you could use these as a limit order, right? Get paid to wait. So if you're selling a put option, and maybe you want to buy that stock anyways, at a particular price, then again that's like putting in a limit order. Inversely, you know, selling the call option, again, be like doing a limit order, but that you'd be putting on a short position. So if you're a technician, and you think there's certain resistance, you have your your call that you have up for sale, and it goes up beyond that, and that's around your resistance, right? That you would put in your short order essentially when the shares got assigned to you. Okay, so of course the risks: unlimited loss for a call. Theoretically, unlimited loss for a call because there's no limit to how high a stock can go. Okay, naked calls are limited because the stock cannot go below zero. You'll still lose a lot of money, but like I said, there's just not that unlimited loss with a naked put. Okay, so let's look at an example. So we're going to base this on one contract, and again, this is just an example for educational purposes only. This is not a recommendation. In fact, selling like naked calls and naked puts, quite frankly, I don't do that. It just doesn't fit my risk profile. Maybe for others, but it's not for me. But anyways, so we sell like the 260. These prices, by the way, are based on the close of on Friday, on October the 20th. Okay, so again, selling a 260 December call for the spies, $1.76. Of course, your max gain is $176, and of course your max loss is infinite, which I find terrifying. And again, selling a put, say 251 December, $1.79, and your max gain is $179, which is the premium, and your max loss is 24,921. I got to that number because you have to think what happens at assignment. Okay, so when if you get assigned the SPY, you're SPY, you're being assigned at $251. So again, say the SPY goes down to SPY goes down to zero, right? Which again, unlikely to happen on there, right? But if it goes down to zero, so if it's been assigned to you at 251 minus that gain of 179, that's going to give you that 24,921 on there. So let's look at it on the paper money account. Okay, so take a look here. All right, so we have our SPY. So December. Let me show you the because I was talking about how it takes up less buying power. Okay, so the buying power effect, $4,531. Now, If this was in like, your IRA account as an example, right? Of course, then it has to be a cash covered put. You have to have it, covered with that cash, right? So it would be, it would tie up $25,711 for a cash covered put. But since this is an uncovered put, you get a bit of a break on your buying power effect. So you can, you could essentially, do a lot more with that buying power. Of course, you're going to increase your risk if you do that, but yeah, it is less, less of a buying power effect on there. Okay. Um, again, same with the calls are the same thing. Let's do the. I think I did the 261 call in our example. No, sorry, I did the 260. All right. So yeah, here we are. Again, buying power effect, $4,855 on that. So, so you can certainly do a lot more contracts if you want to. Again, the only time, I've never used it, but the only time I would ever use it if I was going to use it as, as like a limit order, if I wanted to actually have the shares put to me, if I wanted to buy them at a certain price. I'm not really I'm not someone who shorts stocks, but again, that would work inversely on the other side if you're selling a call. Well, anyways, I just wanted to cover that in case you've heard the term naked calls or naked puts, and explain what they are and how you can use them. So that's all I have for this video. Plan on maybe doing a couple more videos during the week, and yeah. So today is tomorrow's Monday, so it's a start of a new trading day. I'll see what I can come up with on there. And again, if you like this, please give me a thumbs up. Put your comments in. Any comments, suggestions are are always welcome. But anyways, have a great weekend, and talk to you soon. Bye for now.